What do you think of the cut yesterday? Would you call it a hawkish cut, as so many others have today?
Yeah, I guess that's one way to look at it. I mean, we think that the Fed is done for now. We kind of agree with the assessment that the U.S. economy is fundamentally strong. The only thing that's really changed is the global outlook, and that's really being driven almost solely by trade and the trade conflict. So hawkish cut, I guess you could say that, because it doesn't look like there's an obvious path for another rate reduction, which is kind of the way we're looking at it. We think that the Fed stays on hold from here, not only to the end of this year, but actually to the end of next year as well.
So that's not necessarily how everybody sees it. Is that because you think the data is better than the market is factoring in? There does seem to be an expectation of further cuts to come from investors, from the market, even when the Fed looks pretty divided in sort of three different directions.
Yeah, I guess we're talking about two things here, really. One is the market expectation and what we see in financial markets. The other is really the real economy in the U.S. And if you read the statement that the Fed put out yesterday, still sees economic strength, as we do. The labor market's strong. The household sector is still strong. Consumption growth is good. A little bit of weakness in investment and in exports, but it doesn't look like we're on the verge of a downturn. It doesn't look like we're on the verge of a recession. We don't buy into that story either. So the U.S. economy is still fundamentally strong.
You don't think do you think that the trade war is going to catch up with the U.S. economy in the same way that it's already caught up with the seemingly detached German economy and others globally?
No, for the simple fact that the U.S. economy is not as open as the German economy. It's not as concentrated in manufacturing. It's more services-oriented economy. So despite the fact that the U.S. is the center of the trade policy uncertainty, the economic impacts of that between China and the U.S. are bigger in the Eurozone. That's why we expect to see more policy easing in Europe than we do in the U.S., even though the U.S. is, at the center of the trade policy dispute.
What do you think about the possibility that the tail wags the dog here? A lot of people would say that the Fed was pushed to a rate cut by the market because, of course, you're still in a situation where 2% growth, 2% inflation, 3.7% unemployment. And, of course, the president may have pushed them there as well. I want to let you listen to a little bit of sound when a journalist asked the governor about Trump's attacks. Listen in.
Mr. Trump has been a very vocal critic of you and your colleagues, recently calling you boneheads, and just now has called you a terrible communicator. How do you respond to these criticisms and any regrets to have this many press conferences?
I don't. I'm not going to change my practice here today of not responding to comments or addressing comments made by elected officials. I will just say that I continue to believe that the independence of the Federal Reserve from direct political control has served the public well over time. And I assure you that my colleagues and I will continue to conduct monetary policy without regard to political considerations.
James, do you think that political or market considerations play into what the Fed does?
I would say yes on the market side, not so much on the political side. I think as long as Mr. Trump is in the White House, we will have these kinds of outbursts from him with respect to policies that he's not happy with. Our sense is that doesn't really move the needle for the Federal Reserve. It makes the job a little bit more difficult, opens up these questions about independence. But, more broadly, there's a question of central bank independence, not just in the U.S., but globally. I don't think, and we at Fitch don't think that it really makes much of a difference. From the market perspective, yeah, the pressure on the Fed is something that probably is something they take into consideration, as other central banks are doing. We're a little bit worried about that sort of capture of central banks and what that means, paying less attention to the real economy and a little bit more attention to markets. But, getting that mix right is never going to be easy.